There are sessions that are between lunch and dinner. There are sessions that are between drinks and dinner. This is a session between conclave and the awards. But what got you to the awards is this jury. So they rightfully deserve to be applauded to begin with, because they're the one who got us here. And on our panel, we have three very different and distinguished gentlemen. I'll start with the toughest question. To my left is the man who's been there, done that. The one after him is going to try and do it. The one after him has a clear timeline and a clock to do it. We've seen Saspocalypse, but this man has done AIPO, if I can call it, an AI company going for an IPO. So I'm going to start with a very tough business question. Srikanth, how did you pull it off? Because these two gentlemen are trying to do what you did. So, A, why did you decide to do what you do, which is take company public and not continue on the funding route? And how was the experience? As you know, some of the TV journalists say, kaisa lag raha hai?
Excellent. So Fractal was set up many, many years ago in year 2000. And very interestingly enough, we set it up as a public limited company because we thought IPO to karna hi hai. So instead of private limited, let's be public limited right away. And of course, it was a pretty foolish decision to be a public limited company that early in our journey. But overall, I think good that we have gone public. We had this intention of being a public company because very early on, I've had this, let's say, fascination or mission to build an institution that will be there for 100 years. That's my success mantra, is that if 100 years later, Fractal is still surviving as an institution, we have succeeded. Otherwise, what's the point? So as part of going, and as a private company, we've raised more than $1 billion over the years. Right? Started, with a very small round of 400K, then 25 million, then 100 million, then 200 million, then 360 million, then another 200 million after that. So almost $1 billion we had raised. So we could have continued raising money, but private investors have a horizon. So it could be 4 years, it could be 6 years, it could be 8 years, but they have a horizon. And therefore, we have to find an exit for them and get a new investor to come in and take their place. And we can go on doing this, but it felt that as a public company, we have access to permanent capital. We can build this for a much longer term. Yes, there is quarter tak or QSQT, as they say. There is some of those pressures of being a public company. But the reality is that you have the maximum permission to innovate and build an exceedingly ambitious company when you're public, as opposed to private, where the investors control the decisions you make and have a horizon, and therefore might behave slightly differently at that when the time comes to exit. Here, everyone can exit any day, and therefore in some ways you have permanent capital. So that was the logic. And so far, it's been just 10 days of listing. We haven't done the first earnings release also. So the jury is out on how good this experience will be, but so far so good.
Do you watch the stock ticker every day?
On day one, when we listed, for the first 2 hours, I had not seen the stock at all. And I told myself that I'll not see the stock at all. This was, I told myself, I told others told me, but it happens that I'm seeing it every day as of right now. But maybe once the dust settles down, I'll stop doing that.
So before quarter se quarter tak, you're saying 1 ghante se 1 ghante tak. Right. Why have you resisted till now? Though I know that you are headed towards there. You built, Naveen, this question's for you. You built a unicorn. You had enough funding. Things were going great. Why invite such public scrutiny and pressure? The need for an IPO, at what stage does one decide that this is the right time for it?
Firstly, Deepak, congratulations on putting such a great event together.
Thanks to you guys, because you help us get the winners.
It's brilliant to see this. Please give him a big round of applause for
the team ET. ET Digital, everyone ET.
So look, any company, thinking about an IPO, not just us or anybody, thinks about it to say, hey, what is it that you really, why should you, invite the scrutiny that Srikanth just referred to. There has to be a very logical reason, or a profound reason, actually not just logical, a profound reason to be able to do so. We think of it as, whenever we decide to go IPO, it should be because it'll allow us access to capital that allows for a very different dimension of growth. And I think companies should go IPO only when they have figured out their business model completely, because what you truly are getting in India today is a very cheap capital. Okay, so think about, you get like a 40x multiple. Effectively, it's 2.5% interest, interest rate capital that you're getting, because somebody is giving you a 40x multiple. So therefore, you got to utilize that capital to essentially grow much more rapidly. And therefore, you should have a plan to essentially utilizing that capital more aggressively. What does a high multiple in a country like ours mean? It effectively indicates that, look, on one hand, our country is kind of baking in a lot of, at the most fundamental, it's baking in growth on its own, that, hey, we will just grow, so, we'll give you some benefit of it. But on the other, what it is truly telling you, even though our reason for the multiples to be so high is because we have influx of capital, which is like amazing for a country like ours. But in true spirit, it basically is saying, I'm giving you very low, cost of capital. Please grow disproportionately. And I think what is happening is that growth is not coming out for all companies. When you go out there and think, hey, I got capital at 2.5%, best case 3%, like, you should just be going crazy on growth. So I think the idea of an IPO is associated with ability to leverage that level of capital to drive a disproportionate level of growth. Now, what is happening is, when the markets essentially see and say, hey, the stock price came down and it's not like staying up, it effectively is saying, you did not utilize my capital to show me the growth that I actually expected you to show me. And so therefore, I am going to penalize you a little bit for it. And I think cannot be a better time for an entrepreneur who built companies, 10, 15, 20 years ago, like, Srikanth did, to come into the market, get access to large scale, low cost of capital, and then grow to a very different magnitude of a company. Every country of sizable scale goes through this curve. America has done that in the 50s, or 60s, 70s, 80s. Yeah, even today, frankly, if you ask me. But what it does, it basically creates this flywheel of capital, which requires companies to grow really big. So therefore, the underlying point I would make is, if you're thinking about an IPO, you've got to really relook at your ambition levels. It is not an end point, it's a milestone to say the ambition needs to change if you are actually going to be public in a market like India. If you did go to a market like the US, where typically it's you're basically being paid 8 to 10x forward, that means you have a 10 to 12% dollar interest rate. Fine, just grow decently is the expectation. That's not the case here. It's a very, very subsidized cost of capital. You got to think very differently about.
So with that cheaper cost of capital comes the responsibility of growth, if I can understand.
Well, actually, it's ambition of growth first to begin with, and then you got to really utilize that and then grow at that rate. Basically, what they're saying is, I expect, like, there is a meaning to a 40x.
Right.
There is a meaning.
There's an expectation very clearly set for you.
And you got to basically say, okay, I am taking that. It's not fun to just take it. It basically is a responsibility to say, okay, now I got to go into it. So you got to grow into it. It's like, oh, hey, I think you deserve a great house. I am giving you a lot of things. You got to then pay that back. Right? So it's just, it works both ways.
Right. Sharad, you've built a company, you've sold a company. Now you're back at building a company. What gives?
So first of all, Deepak, thanks for inviting me not only to the jury, but also to this panel. So yeah, the first time around we built NetMagic, we sold it to Entity. The reason, my concern, wanted to give our investors and employees an exit. Wasn't sure at that time whether the market, data centers were still new from a market perspective when entity came in 2012. And
Can
so,
we increase the volume? Sorry, I
can you hear
myself
me?
can't hear, so I assume.
Can you guys hear?
Yeah.
Okay. Aim was to give them an exit. So we sold majority stake. We didn't sell the full stake, and got, and then we didn't have to raise capital because data centers are a very capital intensive business, and so we didn't want to keep on going to the market or to anybody else to raise capital. Entity had a war chest of money that we could use to scale, and we grew. Using that, we became India's largest data center company. The concern I used to have at that time was what Srikanth is going to face now, which is the quarterly earnings. And I used to think that, and I may be wrong, but I used to think that it may make me take the wrong decision just to meet analysts' expectations. I know Srikanth won't do that, but I'm just saying that that's the reason when we were debating of IPO versus sale, we chose the latter, right? But this time around, we've taken, we've got a partner like Blackstone. And the aim is to go public in a few years. Once we have, as Naveen said, once we have that growth engine going and we know we can start growing at the pace that the market expects us to, then we will hopefully go public.
Right. Srikanth, right now there's a lot of chatter of AI bubble. Some say it's a bubble waiting to burst. Some say there's a correction on the horizon, just wait for it. But there are others who are betting their last dollar. Stock market has gone through multiple hoops. Initially, there was massive investment chasing the AI investments around the world and more so in US. Then Anthropic comes with a little plugin and everyone's scared. The tech companies are equally scared. I remembered some of the conversations when you were doing IPO interviews, you were asked the same thing. Standard question, especially the Hindi channels, aapka business bachega? Those are the questions that this man was facing for IPO. And here, I remember seeing that interview and Srikanth was wondering, but main hi to sabko girane wala hu. I'm going to kill all. Why are you asking me the same question? But the existential question is, your view and understanding, since you've been, at it for so many years now, is it a bubble? Is it a myth? Will there be a slight correction? Or all of this is hogwash, this is for the long haul, go for it?
It is the last of the alternatives you gave me, because AI is such a foundational technology that it will change everything that we know today. It's already, you can see some of that resulting in the panic that you see in the markets, but it is such a foundational general purpose technology. You're solving for intelligence, like industrial revolution solved for labor, right? It is like, you need not have physical strength in order to build things. You could use machines to build things. Then came the computing revolution, which was all about reducing the distance, ICT, like communication, make distance go away, right? You can travel to any place, you can communicate with anyone. That was all about the information revolution, ICT revolution. The AI revolution solves for intelligence. Essentially, we are saying that if you think that you're relevant because of your IQ, think again, because IQ is no longer relevant. The machines have a greater IQ than you. So it's so fundamental, it will change everything. And I think as of right now, it is not a bubble, it's quite the opposite. It is underhyped, not overhyped, in my opinion. For example, just in the last 2 weeks, Google, Amazon, Microsoft, everyone has doubled their capex commitment. Last year, when Google committed 100 billion of capex, which is 22% of their revenue, it was like, okay, my God, this is too much capital invested. Now they have said, no, we will invest 200 billion in the next 1 year on AI. Everyone has doubled their AI investment commitment. So if it's a bubble, obviously some of the smartest people in the world are getting it wrong. They're not. They're actually getting it right, because it is going to change everything in that very fundamental way. And what Anthropic has shown is that it's just a warning shot that this can happen. And in that sense, every major company in the world, every major CEO is thinking, how do I use AI to leapfrog in terms of growth, in terms of profitability, in terms of introducing new products? How do I survive with AI? I saw an interview with JP Morgan Chase CEO, and Jamie Dimon talking about exactly the same thing, that it is absolutely foundational for any industry which is not physical in nature. Physical industries are still somewhat distant, but any industry that is cognitive and repetitive in nature, think healthcare, think insurance, think financial services, think many other industries, you are seeing AI coming and potentially helping them completely reimagine the industry. So it is the most important trend we need to watch for. All other trends are essentially because of AI. AI is changing it, and therefore everything changes because of AI. It's like electricity changing all of manufacturing, all of household appliances, everything in the early 20th century. AI is changing all of that in the 21st century.
Thanks, Srikanth. I would say AI is changing the way ET works and operates also, and that's one of the reasons why we thought to hold this event at the very start, at least take one step in this direction. Naveen, you've built InMobi, advertising platform, and then you have this new stint with Glance.ai. Where do you stand in this debate?
Well, it's clearly not a bubble. Okay. I think there is a lot of confusion because in reality, when such, I completely agree with everything Srikanth said, by the way, right? So the other way to say some of the things he's articulated is, if you have such tectonic technologies come about, the change is not linear. The change this technology is causing is a non-linear change. We are not trained to see non-linearity in the world. Unfortunately, your non-linearity will be different from my non-linearity, will be different from his non-linearity. We don't know exactly who will be right. At least we are right to say it will be non-linear. So I don't think it's a bubble. I don't also think we exactly know what it would look like. And so the riot in the market right now that you're referring to, the major sell-offs and whatnot, are effectively because people are unsure. What all can it change? I think everybody is wrong, possibly in the short term, and everybody is wrong, certainly in the long term. What it means is that certainly everybody is overreacting in the short term and have no clue about what all it can do in the long term, right? So I think panic is a very good state that people are in. It's a very sane state, if you ask me. And so where we stand on this is, as a company, then how do you think about like decisions that you make, right? This is, I'm not a market maker. I'm not an investor. I like to observe one.
Doesn't this panic distract you from your goals? Because
Distract me from?
distract you from your goals, because a lot of doubt comes at times in your customers, at times in your investors. How do you deal with that?
And this is a great question. I'll tell you why. So there will be two kinds of companies, one who will be able to win out of this and one who will not. So as a company, the way we think about this is, we may not know everything today, but we are very clear that we have bet big on this. Where you'll certainly be wrong if you don't bet on it. What I mean by that is, and I think people are confused by using AI for operational efficiency. Well, that's fine. You should use it. It'll give you great gains. If you don't use it, you're anyway dead. So, but I think people are very happy that, I use it for this process automation, this process automation, that process automation. No, that's not that's like kiddie usage of, like kindergarten usage of AI, right? You have to fundamentally change your product. You have to fundamentally change what consumers or customers, depending on where you are experiencing from you, period. And I think that is a much harder play. Therefore, we actually think about this as the greatest boon that could come to us. Think about all the entrepreneurs in India. I have this very important analogy. When we all started building companies in like late 2000s, around 2008, 9, 10 onwards, right? That's where the Indian startup boom really kicked off, truly took off in 2012 onwards. Internet was gone for us too. Like we were picking nibbles. Oh, this vertical in our country, let's go for it, right? Because the big things were taken away. Well, I couldn't have imagined a scenario 5 years ago that such a great technology would come in, which becomes a leveler. And therefore, the opportunity that everybody sits on is to say, hey, the world's the oasis now. You can build whatever you want. Whatever you think is big, make that 10 times, 100 times bigger and go for it. Because everybody's figuring it out and it's down to the basic level playing field again. If I were an entrepreneur and India was in that state, let's say in 1995, we would have built very different companies. We would have built global platforms. We built internet-led technologies, digital companies in 2010 onwards, 15 years late. AI gives you that leverage to say, wait a second, I can build something much bigger. Now, the frontier models are always, a threat. But, they're not going to go everywhere. They're going to go in few places, which are horizontal use cases and whatnot. The vertical use cases with proprietary data, proprietary workflows are all to be taken, and every one of them will get disrupted. And in AI, the first 3 companies will take 90% of the market share. And then you're basically dealing with a long tail for the bottom 10%.
But are these the first 3 LLMs, or are you talking of applications?
In any space, think about LLMs. They are commoditized now, right? So the frontier models are commoditized. Very hard to figure out difference between one and the second and the third. You should basically create an orchestrator and figure out which one you want to use. Use anyone that you want. They're like cloud provider. They're all roaming around everywhere in the world, trying to make sure that you use their platform. And there is pricing pressure. There is a bunch of those things. So therefore, the true value creation is not going to happen there. It's going to happen in the application layer, where an application is not just a wrapper on the model. It's far, far more. You build your own models and whatnot, right? So I think the opportunity for Indian entrepreneurs is to really go much bigger, much deeper, really big out there. And that level of opportunity has never come before. So we as a company, we bet big on commerce. We are trying to essentially go build an agentic shopping platform called Glance globally. We fundamentally think the way the world shops will change with Glance. And that's a model or an agent that really helps you shop. It's very different from anything out there. We think it'll be one of the 5 global shopping agents when the dust settles. And that's how big we are really trying to go after. It is, and you can do so not with like 50,000 people or something. You can do that with 500 people now. And that's the power of what we really are talking about.
Right. Sharad, on this debate, you are at the infrastructure level. You're ready to build many more data centers, use the latest scheme of 20, 25-year tax holiday till we get Viksit. But if the bubble bursts, if the infrastructure requirement goes down, if your customer sitting here says, no more data centers for me, Sharad, do you have a plan B?
No, first,
buy them back from the guys you sold it to.
No. So first of all, just to carry on with what they said, I agree with what both of them said. It's not a bubble. It's for real. Now, from an infrastructure lens, there was a little bit of extra hype in the short term. So, for example, companies like OpenAI committed $1 trillion worth of infrastructure spend with $20 billion in revenue, etc. And also, there was the Neo Cloud that is the largest in the world is CoreWeave. And if you looked at CoreWeave, there was a fair amount of debt on their books, and the stock price went from 40 to 180. Now it's settled at around 90. So I think that correction of that bubble has already happened, in my opinion. And right now, CoreWeave, for example, has $55 billion of orders that they cannot fulfill because they don't have enough data center capacity and they don't have enough. NVIDIA cannot produce a chip. CoreWeave. Oh, yeah, they're the largest neo cloud in the world, right? So I think in the short term, in the short to mid term, there's no way. And as he said, in the long term, we don't even know. It could even be bigger. So I don't think there'll be a situation in the near term where right now there's demand supply is so skewed that you don't have enough data center space to fulfill the capacity. And the traditional data centers are getting, the new data centers are all liquid cooled to cater to AI workloads, because the entire shift is happening from traditional workloads to AI workloads. I think till last year it was about 30% AI workloads. By 2030 it'll be more than 70% AI workloads. So in the next 5 years, I don't see this happening, right? There are new technologies on the horizon like quantum, etc., that are coming. Time will tell. I think it's too early to say. I think the next 5 to 10 years, I think the demand is more than the supply.
There's more. Okay. Now, Srikanth, this is a room full of hopefuls on AI. Some are betting their last dollar, their last saving, their last career. No, I wouldn't say last, but their career on AI. You bet on it long time back. But there's again this question of hype versus reality. From your vantage point, what do you think separates the serious AI company from the hype-driven AI companies?
See, just a couple of things on the previous argument. Just also want to add that today, if you look at NVIDIA, it is trading at 27 times forward earnings. It's still one of the most reasonably valued stocks out there, with a 77% gross margin and some 50-odd% EBITDA margin. So these companies are actually extremely well run and very profitable, and therefore their valuations are very reasonable. Even if you look at some of the not the open AI, they're not public, but if you look at the private, publicly held AI companies, they're actually are at very good valuations. Last point I'll make is that Howard Marks talks about two kinds of bubbles. He talks about the bubble like the 2007 housing bubble, which did not add any value to the world. And he compares that with a bubble like .com bubble, because of which the entire internet infrastructure of the world got created. So even though at that time valuations went up way too much, it created the infrastructure on which the world runs today. So AI is that second kind of a bubble. Even if it's a bubble, it is a bubble which will create this massive infrastructure of intelligence that will power your self-driving cars and your doctor diagnostics and everything else in between. So it's very, very important. And now, as far as companies in this space are concerned, the one thing that you have to think of is the moat here comes from either being extraordinarily good in terms of model accuracy, beating benchmarks, and so on. Very few companies who can claim that, who can build models that can match and exceed the state of the art and continue to stay on the leading edge of results in terms of AI progress. That requires a tremendous amount of capital. Either you are there, you're winning that race, or you're driving adoption and distribution. So if you have enormous number of users using your product, that moat, and then you can, with AI, and two, if whenever GPT comes to GPT-6 or GPT-7, or Claude comes from Claude 5, or any Gemini comes to Gemini 4, is your product or service getting better, or is it getting threatened? So if you have a business that is actually getting better with the latest model advancements and you have a distribution moat, then you have a very good chance of winning. Those are the ones that will win this AI race, as well as the ones who are building these models and staying on the state of the art. These are the two players who will win. The third kind of players who will win are the ones who are providing picks and shovels to this, all the people who are aspirants in the industry, like Sharad. I'm 100% sure that his business is going to do extremely well in this AI world. So those are the three kinds of companies I think you could build at this point of time to succeed.
Right. Naveen, I remember asking you this fundamental question: what kind of AI companies does India produce today? And you had a very clear answer, which you referred to earlier. If you're just using ChatGPT, you're a kindergarten AI user. My question to you is, most Indian startups today, are they using wrappers, or are they building something meaningful and purposeful? What is your view on it? And what do you see around you?
Look, I think I'll partly borrow the answer that Srikanth gave, because I don't think that is the major question. So there are companies that need to build. There are companies that need to build something on top of a proprietary data set. Okay, so if you have a proprietary data set, then you could build something very interesting, which basically means you have ability to train a model, which is what Srikanth was referring to as the newer model comes. Is your model actually improving because you have something which is proprietary? If you don't have something proprietary, the new model comes, there is no change in your model, which means that the new model actually is catching up to you. So therefore, that distinction is very important, that you have a proprietary data set. That could come from the workflows that you have, the customer engagements you carry, whatever. But the second most important one that he also touched upon is, which is where I think the companies have to make a very rapid shift, is distribution. It is so easy to build software, to build code, to write anything, that frankly your big moat is very rapidly moving to distribution. And therefore, are companies realizing that distribution is the only moat? The answer is yes. But are they realizing it fast enough that that is the only moat that they sit with? I don't know. So therefore, you can build a great model, you can build a proprietary model, but very quickly you have to jump into scaling this so rapidly that that is the only moat you will have. So the combination of these two things, by the way, is going to be very interesting. And the last point I will add, by the way, is that there is a very interesting shift in the world from software to hardware. This shift from software to hardware is real because consumer experiences will be controlled, of course be controlled at the software layer, but the software is becoming so commoditized that the hardware becomes very powerful. So I think as some of the companies think about hardware interestingly, there is an interesting new mode coming up, but for 20 plus years, it has been told that hardware is a bad place to be at, but I can bet you that the next wave of growth will actually come a lot from the hardware level companies, because they will control the proprietary data collection, because that is where it's happening.
Hardware man is itching to go.
No. I was just adding, the most valuable company in the world is a hardware company, right? NVIDIA. So I totally agree with what you said. Yeah.
Okay, my time's up, but this one last question going back to the original title of this conversation. 1 or 2 line answer from you, Sharad. What does India get right on AI front, and what does it badly need?
So let me start with what it does badly need. I think we need a lot of compute. We are nowhere close to. I mean, the total compute in India is about 50-60,000 chips, GPUs, whereas in the US it's several millions. We believe that this will grow 5x, 30x in the next 5 years to at least 2 million chips. Right. So that's one thing that it badly needs. I think the second thing that companies like Sarvam, who spoke before, and Srikanth, and even Naveen, I attended his fabulous presentation on Glance. Is the depth in research, right? Not just a wrapper, as Naveen said. We need that. These are the two things that India needs more. There are, of course, great examples of Srikanth, Naveen, and Vivek and Pratyush, but we need a lot more of that. So these are the two things. And last but not the least is risk capital. Risk capital. So you look at, if you look at the numbers of OpenAI or Anthropic for the matter, look at the valuation, look at the kind of money they're raising without nowhere being close to that. In India, we don't have that kind of risk capital. The reason we chose Blackstone is because they believe in this space, and they've invested in the largest data centers in the world. They've invested in OpenAI, Anthropic. They've also invested in CoreWeave. And so that's one of the reasons we partnered with them.
Srikanth, you want to take a crack at it, but you'll have to be very quick. 1 line or 2. What's great and we should continue, but what we badly need?
What we badly need is greater ambition. I will say that as India, we are thinking too small. 10,000 crore AI mission, that's like one weekend expense of OpenAI, right? That's the size of our ambition. That is not going to work. Even 100,000 crore RDI is still 10 billion or 11 billion. That's 1 month expense of some of these OpenAI type of companies. So these are small numbers relative to what is needed. Much, much, much bigger aspiration, number one. Second is build an India model. For example, Fractal has Vaidya, which is right now number 1 on health bench hard. So it's the best healthcare model in the world. But we have built that model. Now, if we can make 1.4 billion people on the planet use it every day, that data, the feedback from that data can help us leapfrog and reach AGI faster than other countries. So India's goal should be take an India model, and make it available to every Indian, like Aadhaar with UPI, make it universally accessible and use that feedback to progress towards AGI. So that's what India should do, and then increase the size of them. These are my two thoughts.
Both of them took too long. You'll have 2 lines. I'm sorry.
Let me just copy them then. It's
Okay.
much easier. But copy the answers I meant. Look, I think he absolutely was bang on to say ambition levels are just not there. I don't think we have that level of ambition. You have to think global. You have to think very differently. You have to think very, very big. It's not happening today. AI requires you to play a very different game. And the risk capital point is very true. We actually don't have risk capital. We still don't understand. We don't really have investors who understand AI. We don't have investors who understand technology. It doesn't exist in our country. So therefore, how do you back an AI company is quite hard to be done from
You're saying not incremental, but think exponential. Only then.
both from an ambition and capital point of view.
Right. You know, it's uncanny. This is fractal.ai. This is glance.ai. This is nesa.ai. It's like the Brahminical surname. If you don't have it with you, you're not arrived. Thank you, gentlemen. I know you've bet your careers on AI. I hope this room will also do so. Thank you so much.
Thank you.